Welcome to This Week in Finance, covering July 6th till July 13th of 2025.
Market overview and key highlights. This week, U.S. stocks maintain near-record levels, with energy and industrial sectors driving gains that helped offset ongoing tariff concerns. Despite tariffs returning to the forefront, markets showed resilience. Notably, over 20 countries face new tariffs, though the 90-day pause has been extended to August 1. Additionally, the government signed the One Big Beautiful Bill Act, which extends the 2017 Tax Cuts and Jobs Act provisions and introduces new tax incentives.
Tax legislation and fiscal impact. The new legislation extends existing tax cuts and offers additional deductions for tips, overtime, and Social Security. The SALT deduction rises to $40,000 but phases out for higher incomes. While these measures are expected to reduce federal revenue by about $4.5 trillion over the next decade, spending cuts will offset some of this impact. As a result, government deficits could increase by roughly $3.3 trillion, highlighting the significant fiscal implications.
Tariffs and trade outlook. Following the expiration of the tariff pause, new tariffs were announced on over 20 countries, with rates ranging from 15% to 50%. Brazil's tariffs, in particular, surged to 50%. Meanwhile, trade agreements, such as with Vietnam, have reduced tariffs significantly. Although tariffs haven't yet had a major impact on inflation, the potential for gradual price increases remains, especially as tariffs are expected to rise further, complicating the economic outlook.
Investment strategy and market outlook. While the economy is currently showing signs of slowing, a rebound is likely in 2026 and 2027. This growth reacceleration will be fueled by recent fiscal stimulus measures, such as tax extensions and government spending, and anticipated easing of monetary policy by the Federal Reserve. The Fed is likely to consider rate cuts starting in the fall, which would lower borrowing costs, support consumer and business spending, and promote higher economic activity. Additionally, ongoing deregulation efforts may reduce operational costs and stimulate investment, further boosting growth prospects. Given the current environment, U.S. large-cap and mid-cap stocks are positioned to perform well, as they tend to be more resilient during economic slowdowns and benefit from the anticipated rebound. Currency fluctuations and geopolitical uncertainties make investing in high-yield bonds less attractive, considering yields are already relatively low. Markets may experience increased volatility as economic data softens and trade tensions persist, which can create attractive entry points. Investors should view pullbacks not as setbacks, but as opportunities to buy quality assets at discounted prices.
Biggest movers. After a strong two-week rally, the S&P 500 and Nasdaq took a breather, slipping slightly from their record highs. It was a modest pause following a 5% surge in the S&P. Meanwhile, Bitcoin broke through the $118,000 mark for the first time on Friday, rising 9% for the week. That's a sharp rebound after briefly dipping below $100,000 just weeks ago. And also a record high for copper. Prices soared 13% after the U.S. announced steep new tariffs. Silver followed suit, climbing 6% for the week and reaching its highest level in over a decade.
Thank you for watching This Week in Finance. Stay tuned for next week's episode next Sunday and have a great week.